Hello everyone, this is David Bratanek with Coldwell Banker Southwest Realty. Today we're going to go through the market stats of what happened in the month of October 2021. We're going to compare it as usual to what happened this time last year, as well as last month, what happened in September. So first, let's go through the stats of October, and we'll get started right now. So the average sale price was down a little bit from last month. Not too severe, but it has come down a little bit. I'll explain why in just a moment, but it came down to $491,850, and the median sale price was about $413,000. So those are both down a little bit from the year's average so far, as well as from what happened in October of this year. In October, that average sale price was just over $500,000 at $506,000, and the median sale price was at $445,000. So what I think has happened is, typically what happens in the fall is the market cools off a little bit. There's fewer buyers out there who are hoping to move in those months of January and February, and so things kind of calm down. Also, Christmas is just around the corner, so people don't want to be moving during that sort of December time frame because they've got a lot of things going on with their families. So the market tends to cool a little bit during this time. It's not unusual, and it doesn't necessarily mean that house prices have really come down. It's just that the market's a little softer now. The average, if you compare it to this time last year, we're still way up. So it's still almost a 10% increase over what was happening this time last year. Now you got to remember, the last year's fall market didn't really decline in the same way that it normally does because lockdowns had come and really pushed that spring market further. And then once things sort of started opening up again in the summer, all those spring people sort of moved in the summer, and the summer people moved into the fall. So we never saw that slowdown that's pretty cyclical last year, but this year we are seeing it. The prices overall, though, so if you look at the average year to date, that's a better indicator because it goes over the entire year where what we've sort of settled on. So average sale price at $505, not much different than what it was for this month at $491. That's still 25% higher than the year to date as of last year. So last year prices continued to rise throughout the year. This year it looks like prices have come up and then they've sort of plateaued. And there's always going to be a little bit of minor variation in there depending on what type of house happens to sell, who happens to buy and that kind of thing. So it's really nothing to worry about. If you've got a lot of $2 million sales, those typically happen more, I think, in the spring than in the fall. Waterfront property has a bigger demand during the spring and summer because people can enjoy it, and so it sort of goes off to the wayside in the fall and winter months. But I think we're going to see for next year, I'm already starting to see some signs that I think we're in a really good shape for next year for what's going to happen. Hopefully we see, I think, another strong spring, and every indication at this point sort of points me towards that. And comparing us to other marketplaces is important too. So comparing to other marketplaces like Kitchener-Waterloo, Toronto, Barrie, even London and Windsor, all of those places have higher prices than here. So it's driving a lot of people here. There's a little bit of uncertainty when it comes to going back to work. I know a lot of employers are telling their employees they want them back in the office. And really we're going to see what's going to happen, how this is going to play out. Because if the employees are saying, no, we're not going back to work, that will help the Sarnia area because people will move here knowing they're working from home. And if things go sort of right back to normal where everybody's in the office 5 days a week, that's going to hurt some things in the area because, if your job is in Kitchener, you can't really commute. So comparing it to what happened a month prior to what happened in September, the average sale price was $506, so just higher than just lower actually than the year-to-date average at the time. And the median sale price was $445, just lower than what it was at the time. So either way, I think we're in really good shape. My prediction, I guess, did work from the start of the year. That said we would sort of be at the end of the year, we would be right over that 500,000 mark. I was very surprised to see it hit in about February, and then it sort of, you know, prices continued to rise a little bit, and then they've sort of plateaued. I don't think it's anything to worry about. I think we're in a really good position. We had 138 sales, residential sales, last month, and 144 listings. So that sales to listings ratio is really important. I always like to use it because it kind of shows you what is actually happening. There's not a whole lot on the market. There's not a whole lot of new houses coming on the market, and the sales are keeping up with that. There's always going to be some that don't sell for whatever reason, condition, price. Usually it's the price, because it depends, you know, with the condition, it's just a matter of how much money someone's willing to spend on it. That's typically the number one factor, is the price, but from what I'm seeing, houses are coming on the market, they're selling. We're still seeing a lot of multiple offers, especially in the lower end, the lower price point. We're seeing a lot more multiple offers in that range, simply because the entry level is really where the pressure is. That's pushing everything up. So as first-time buyers or downsizers, those are all competing for those lower price point houses, and those are really pushing up. There's an entry-level point, basically a minimum that you have to spend in order to get into buying property. That used to be considerably lower. Now it's getting close to the $300,000 mark for a detached house. There are still a few that are selling for under that, but even some townhouses and semis that are pretty rough shape are selling for 300 or more. So we're sort of seeing that as the line, I think. And I think next year in January, February, we're going to see a good kickoff to the year. And I think finding those houses in that price point are going to be even harder. So that's what my prediction is for what will happen in the future. So far, I think our numbers look really good. We can expect to get, you know, 25-30% growth year over year for a long time. It's just not sustainable. But, you know, basically this year we've got 25% growth over last year, and I think the numbers were about the same this time last year compared to 2019, maybe even more so. So things are still going up. I don't foresee this stopping, and we've got a little bit of a lull right now, I think, as just because the fall market is now hit. And once we head into January, we're going to see what happens. If you have any questions or comments, feel free to let me know, and I'd be happy to chat with you anytime. Have a great day. Thank you for watching my video. Please like and subscribe if you'd like to hear more from me. If you have comments, please leave them in the comment section below, or contact me. All of my contact information is beside me and below me in the description. Have a great day.